Right, thanks very much, Sakina. So in our financial news, we've got a story for you where we talk inflation. It slowed marginally in May, defying economists' expectations. Data released by Statistics South Africa shows the consumer price inflation slowed to an annual 4.4% in May. That's from 4.5% in April. Economists had expected a hike to 4.6% following the 82-cent petrol price increase this month. And, of course, that weaker rand. Mbalenhle Mthethwa reports.
The consumer price inflation easing to a moderate 4.4% has come as a surprise. Inflation was forecast to increase by 4.6% year-on-year. Economists say the annual food prices inflation has moderated to a 7.5-year low of 3%, with the most notable moderation coming from pork following the listeriosis outbreak.
We are seeing, in a sense, a window of opportunity where food prices are still quite low. But given the rand's exchange rate slide recently and also the expectation that we might see a bit of inflation coming through due to the smaller maize crop, we might see food prices also rising towards the end of the year.
But economist Elise Kruger says she expects inflation to continue in an upward trend for the rest of the year, which is expected to be driven by higher fuel prices, with the rand remaining under pressure on the looming trade war between the US and China.
We forecast an average of about 5.3% for the second half of the year. But given the fact that we have gone so low on inflation, average for the year should be around about 4.9, maybe 5%, which is still comfortably within the Reserve Bank's target band.
The effects of the 1% VAT hike, which took effect in April, has sparked talk of a possible rate hike by the Reserve Bank. However, Kruger says a rate hike is unlikely given the recent contraction in the economy. Mbalenhle Mthethwa, SABC News, Johannesburg.